Hello everyone, good morning. Let us look at Nifty and Bank Nifty levels. We'll see how market closed on Friday. We'll see what will be the levels for Monday. We'll also see how the levels worked on Friday. Before that, you are seeing Nifty daily chart on my screen. So there are some small observations here. On daily, if you see, this is engulfing candle. So on Thursday, it formed the engulfing candle, and the following day, it has fallen over there from there. Engulfing candle, bearish engulfing candle means it is a bearish sign. And from on the next day on Friday, we have seen market was falling from there. So should we rely more on this pattern and should we expect more fall from here? Let me apply Bollinger Band and show me my observation here. So I have just applied Bollinger Band here. Basically, in the Bollinger Band, the middle line, whatever you see here, this is 20 moving average line. The upper line and lower line, that is nothing but like 2 standard deviation away from the 20 moving average. So normally when the price is above 20 moving average, it tends to be on an uptrend itself. When it is below 20 moving average, it tends to be on a downside. So whenever it is high, it will come touch the 20 moving average and it will start moving high. Whenever it is below 20 moving average, it will go touch the 20 moving average and it will start falling down. So normally that is how Bollinger Band will work. Now, do we have to give more weight on this? See, if this pattern after a strong up move, if we have seen this strong engulfing candle, then definitely we would have given like a strong weight for that. But even looking at this pattern, and if you see the kind of movement it has done before this pattern, maybe we don't have to give much weight on this, but definitely we have to keep an eye on this. Like maybe it can even come to 20 moving average as well, but we need to see how it will do on Monday. And if you see the similar patterns before, here you can see kind of engulfing pattern. This is not pure engulfing pattern because this was not like above that candle, but this is like open high candle. Wherever it opened, that was the high. We can consider this like kind of engulfing, and you can see the price came to the 20 moving average. Even here, once if you see, this is kind of engulfing candle. You have seen price going sideways to little downtrend for next couple of days. But here, if you see, the price was below Bollinger Band, sorry, below the 20 moving average. You can see some strong up move from here in next 2-3 days. And here we have seen this bearish engulfing. There we have seen a nice fall. So do we have to expect this much fall here? This may or may not happen, but at least we should not forget we are trading above 20 moving average, which is kind of bullish sign. And that too, this pattern didn't happen after a too much of robust up move. It was almost kind of sideways move, and then we are seeing this pattern. So we don't have to afraid of this pattern too much unless it go on close below this 20 moving average. And also remember, if on Monday, Tuesday, Wednesday, if market goes sideways and if the price is here itself, 20 moving average will try to go close to the price. Okay, so this is some observation on daily. This is kind of little bearish, but we'll see how we should work on it. Maybe based on how the prices close on Monday and Tuesday, we'll decide. If the price close below 20 moving average, that will be a bit more bearish sign. Maybe even we can expect price going till lower Bollinger Band. Now let me remove the Bollinger Band. Then we'll go to the 15 minutes chart and we'll see how we worked on Friday. Friday was pretty easy day because we don't have to pull our head too much to find the levels and trade. Everything worked according to how we planned before the market. So I have closed the Friday chart. Let me show you. If you are just watching this video, just go and watch earlier day video, then you will understand how these levels worked. So this was one supply we marked. I told you this is drop based rally, and even it has broken this swing low. So definitely there should be some weight for this. For such patterns, we'll go for type 1 entry, which means even we don't wait for any confirmation. The moment you see price going here, we'll just simply enter the put. And the targets we planned was around this area. So from here, the first target will be the previous low. If that breaks, this will be the second target. This is what we simply planned on Nifty. And look here what happened. Look at the first 15 minutes candle. It went close. It touched the supply area. I told it is touching supply area and we entered 18,650 put here around 70 rupees somewhere, I believe. See, we should not get afraid. Once we believe in our study with our levels, we should not get afraid. By the time it closed on 15 minutes, you are seeing this red candle. Just think what will be the candle color when it was touching the supply area. When you see 2-3 red candles, everybody think market is falling. But as a demand and supply trader, we want to find the turning point of the market ahead of the time. So when it was touching this level, this was like a big green candle. It opened here, from there till here, it was like complete green candle. We should not get afraid by looking at such a green candle. We just simply enter the put. By 15 minutes, this has become red. And from there, what happened? It came here, and this was the first level which we aimed for, and the first target achieved. By then, almost this 70 rupees put has become 90 change when it touched this first target. So now the second target will be this. See, definitely from these important points, there will be some pullback. If you want to aim for the second target, you need to plan your trades accordingly. See, if the price come back here and if you move your SL to the buy cost, there is a high chance your SL will get hit. So you can book half quantity and you can still place the SL above this, or sometimes it is okay to bring the SL to the buy cost. That is how you need to trade. And if you have traded with proper trailing stop loss, by the end of the day, you can see price came and touched the lower demand level which we planned. By then, almost that 70 rupees put has become almost like 125, 130, somewhere like that, I believe. 80-90% return on the invested amount. So this is what happened on Friday. It was very easy. We marked this supply, we marked this demand. Once it came here, we entered put, and this is where I asked to exit all the people, and somebody who want to trail with tight stop loss, they would have got this second target as well. So it was very simple. And from here, I said we can go long. This is where one can either enter naked call or some bull call as well. The reason is this is not only 15 minutes level, we also have some nice 75 minutes level as well in this area. So both the levels are coinciding. Again, this demand level, it has broken all these swing highs and it went much high. So that is the reason I asked to enter either naked call if your risk permits, if not a bull call. So for someone who want to enter bull call from this area, this is the plan. So as the price has reached the demand area, one can enter 18,650 call and 18,750. You can sell 18,750 call. Always remember, whenever we enter any bull call or bull put, only two conditions you need to remember all the time. Condition number one, you need to collect 50% premium from your buy. So now here my buy is around 60. So my sell should be around 30. I should be able to get 30. Even though you don't get the exact number, here you can see it is 59.5. This is almost 28. 1-2 rupees should be fine. I'm getting almost 50% return from here. And the second condition, your risk reward ratio should be 1:2 at least. Anything more than 1:2 should be fine. So now the risk is around 1580 and the reward is 3,400 per lot. And the required capital is very much little, 18,500. So you might be thinking, why can't I just go for 18,600 call? Yes, you can do that, but see where you will get the opportunity to sell the call, and also make sure you are getting half price of it, and you are also getting 1:2 risk and reward. I don't think you will get these two conditions will meet when you sell, when you buy 18,600 call and sell anything above. This is the perfect trade, and this is how one should be trading. Why we planned this bull call trade? Because the price reached the demand area in 75 minutes and it is also coinciding in 15 minutes as well. So now we are expecting the price to go up from this level. So whoever entered naked calls here, remember this was one area. This was the previous low. Price was supposed to hold this area, but it has broken that area. And maybe on Monday, if you see SGX Nifty already, it closed some 50-60 points positive on Friday night. There is a chance we can't, there is a high chance like market can open a little bit green on Monday morning. When the price reach here, 18,600 levels, this is where you need to exit your naked calls. because this was supposed to hold, but this price has broken that level. While going back, this could be the resistance. So when the price, if market open like 50, 60 points or 40 points positive, simply exit your naked calls if you have entered. If you want to aim for this target, what you do, wait for some time, let it break this level, let it go up. And if you see any retracement around this area, this is where you can go long. There is a high chance that will work because already this level has been taken out, and when it come back to the retracement area, you can re-enter the same call and you can aim for this target. So that is how you should be trading in Nifty. Now let me go back to Bank Nifty. Even Bank Nifty was like very simple thing. Whatever we set up before the market, it worked exactly how we planned. But there was small issue as well with the Bank Nifty. So let me close everything on Bank Nifty. Let me take this supply area. This was the 15-minute supply area which we marked. We have seen first price went to the previous low, and then we have seen this. So I told here that this is like a strong green candle. It is better to enter some confirmation entry, which means after seeing some indecisive candle, and then we can enter put, because sometimes when you see such a green candle, there is a high chance next candle can make another green candle and it can break all these levels. So risky players definitely can enter put here, but for conservative player, they should wait for some indecisive candle in this area, and then you need to enter put. This is what I have been telling in the group. And later you can see price came here. It gave some nice entry in the put which we entered here, but when the price moved back, again and again, I asked to exit somewhere here with buy cost or with some small profit. See, these are not some magical lines. What happens here? The expectation is that there will be some sell orders here. If the price go here, people will start selling. If it go again, they will start selling. What if price keep on going again and again and again? All the sell orders will get complete there. There will be no more sell orders. And then there is a high chance price can keep going up. If there is a strength in buy, it will complete all those sell orders and it can move high. That is the reason I asked to exit, but later it has came all much lower from there. It gave nice profit in the put. But whoever exit here around buy price and all, no need to feel bad, but that is how we should trade. We should understand what is this supply and demand. Our expectation is that there are so many sell orders. If the price keep on going there again and again, all the sell orders will be done, and there is a high chance market can go up from there. So, but fortunately, it came down from that level. But many times, if you see price touching that same area again and again, it can go much higher from those levels. So the decision what we made here is good. That is how we should keep doing in future as well. Now let us see what will be the levels for Monday. So 43,800, this will be the demand area. If you see price coming here, and then if you see an indecisive candle and if price start going up, this is where we go long. And definitely this is one level which we want to go long above 44,500. That will be price will be entering all-time high. That area we can definitely go long. I want to show you some levels on 5 minutes which we can use for intraday trading on Monday. So we have two supply areas on 5-minute chart. Normally what we do, we love to enter at the above supply area if price gives you chance. If the price come here, if you see any indecisive candle and then price start going there also we can enter some puts. And again, if you see price going there we can add some more puts, and all-time high will be our SL. And from there is a chance market can fall. So when I say about indecisive candles, you can see here, this is small indecisive candle, and then once that low has been taken out, that is where we can enter put. And where this should happen, the price has to come here, and this sort of formation has to happen here. That is where we can enter put. Okay. So the setup is very simple. There are two supply areas. We want to enter put around this area with stop loss of 100 points. 100 points on the spot means what? The put delta, normally ATM calls will be 0.5. So your stop loss will be around 40-50 points at this area. That will be the plan on 5 minutes for Bank Nifty. And while coming down, we don't have to rely on this demand area. Let's say if price opens somewhere here and if it start falling there, I don't want to enter long here because the price came very much close to this area once and twice. So there is a high chance this can cut and it can go below. So if there is an indecisive candle, I love to go long from the below area, below demand area around 43,800. This is where I love to go long with the SL below 43,700. So that is about Bank Nifty. One more time, I'll just show you the levels on Nifty. So on Nifty, let me go back to the 15 minutes so that we can look for the new levels for Monday. Okay, for Monday, if we already entered some calls here, if anybody want to enter new calls, wait. So people who already entered, exit their calls here. And if it break and if it come back, this is where we'll re-enter the call. Even new traders also can enter long here. We don't have to rely on this level anymore because that is not going to work. And if you enter long here, your first target should be previous high. This will be the previous high level. If you enter long here, this should be your first target. Again, if you see price going up, coming back to the retracement area, this is where you can enter call again for the target of 18,755. So that is about Nifty. And remember, if you see price closing strongly below this area, around 18,000 or 520 area, somewhere like that, we can see price could fall till 18,400, 420 levels. In between, there is one level around 18,480, but maybe we don't have to give much weight for this because once it came, it bounced from this level, again it came. There is a high chance when it comes for the third or fourth time, it can break and it can go till 18,400. This is where we love to enter long in Nifty. Basically, that is it about Nifty and Bank Nifty levels. Mark the levels accordingly and trade accordingly. Thank you so much for watching. We'll see how these levels works on Monday, and we'll also look for levels for the next day. Thank you so much for watching.